Hi everyone. Today I want to talk to you about pre-approved loans and what they are and whether they're helpful or not. So first of all, let's talk about what a pre-approved loan actually is. So basically, what a lender does is they take your documentation, they look at your personal circumstances, and based on that, they will then agree in principle to lend you a certain amount of money against a property. So that means that you now have certainty about how much you can actually borrow. Now, this is not a formal loan. It is not completely approved or final. You still have to make a final application once you've found a particular property. But at least you have an idea and a set amount with which you can then start to look for property. So what are the benefits of having a pre-approval in place? And I guess the most important thing is that you have certainty. So often when people start looking for a property, they actually have no idea on exactly how much they can purchase. What is the maximum price that they can go to for a property purchase? So once you know how much the bank will lend you, you've then got your budget set, so you know exactly what you can go out and start either negotiating with sellers on, or if you're going to auction, you know what your maximum bid should be. The other benefit of having a pre-approval in place is it makes you very attractive to a potential seller. If the seller knows that you've already gone through that process of getting your pre-approval in place, then it is unlikely that any contract that they sign with you is going to fall over due to the inability to get finance. So that's an important consideration as well. So are there any drawbacks to getting a pre-approval in place? And the short answer to that is no, so long as you only get one. One of the things that you don't want to do is to make several applications for pre-approval, because every time you make an application, this does go on your credit file. So if you have a lot of inquiries on your credit file and you get to the final process of wanting to purchase a property and a lender has a look at the credit file, you might be deemed to be an unstable candidate for a loan. So it can work against you. So you shouldn't really go through the pre-approval process until you are certain that you actually want to start looking for a property. Don't do it just at the beginning of the process when you're trying to get an idea of what you can and you can't do. Best to wait until you're actually ready to make the process, the purchase, sorry. So does pre-approval mean that your loan is guaranteed or approved? No, it doesn't. So whilst the banks are happy to give you an approval in principle, it still can change depending on some different circumstances. So for example, if you have a change in your personal circumstances, for example, you lose a job or you get pregnant, that can affect your pre-approval. If there's a change in government regulations, that can also have a negative impact. If there's a negative valuation, for example, if you've purchased a property that is $700,000, you've agreed on that price, and then the bank comes in and does a valuation after you've signed that contract and the valuation only comes in at $600,000, that can have a negative impact on the amount that they're prepared to lend you. And also, if there's a change in the property's condition. Of course, that can also impact the value of the house. So there's some information to help you around pre-approvals. So happy house hunting.